The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 22nd, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential, because living up to our potential, well, that's something we must master each and every day. So let's begin with a few empowering beliefs. The first one, brought to us by Bob Marley. Kind of interesting. His quote goes like this: "The greatness of a man is not in how much wealth he acquires, but in his integrity and his ability to affect those around him positively." Not a bad quote by Bob Marley, the Rastafarian out there. Let's go check out one from Albert Einstein. Now, there's a dynamic. There's two ends of the spectrum. Albert Einstein said, "I've got no special talents. I am only passionately curious." I love that. How about Buddha? "With our mind, we make the world." There's no question about that. The last one here from a great person, Michelangelo. It goes like this. Says, "The greater danger for most of us is not that our aim is too high and we miss it, but that it is too low and we reach it." The question for each of us, folks, is not what we do if we had the means, the time, the influence, or the educational advantages. The question is, what will we do with the things we have? Why? Because you have an amazing power within yourself. Let's go check out the amazing power of these markets here right now. We've got the Dow Jones up 26 points, trade out at 14,923. This is the little engine that really can't at the moment. S&P, though, that's up about 0.5%, up 8 points at 1650. NASDAQ up 0.7%, trading out at 3625. That's up 26 points. Russell 2000 up 0.8%, leading the charge on the way up, trading out at 3092. New York Stock Exchange up 0.6%, trading out at trading out at 93.97. Goldilocks up about $10 right now, trading at 13.79. Silver up 30 cents at 23.20. Light sweet crude up 43 cents at 104.28. Our call-in number, 877-927-6648. Give us a call. We can take a look at your stock chart or anything that you'd like. Over in Europe right now, you got the DAX is up almost 1.5%, up 117 points. We didn't look around the globe here the last hour, so we're going to do that this hour for sure. The FTSE's up 61 points, up 1 full percentage point. You've got the Nikkei was off 59, the Hang Seng up 77, and the Shanghai down 6 last night. So let's start off here. Let's take a look at the S&P 500 right now. That's trading out at 1650.60, dealing with that primary trading range boundary line of 1650 out here. The retracement thus far, not exactly much in the way of damage here in the S&P 500, unlike the Dow. But if we do take a look at the damage inside the S&P 500, it has made that 0.382 retracement-ish area. That's coming off of the June 24th low out there. That was at 1560.33. The high put in here on August the 5th out at 1709. You can see that price had broke the rising price channel that it was traveling within. We'll see. It's what it's going to try to do. It's going to try to get back inside it. It tried that yesterday and rejected that area. That rising price channel, I would say, if it get a close today above 1656.99. This on the S&P cash. You get a close above 1656.99. That gives you a confirmation that price will bounce. Bounce to where? And that would be bouncing to set up the B to the C of the A to B equals CD down. Where would that bounce take us to? Probably in that 1680-ish range. Where you got to be really paying close attention is that downdraft from August 15th, the top of which is 1679.61. If you get a close inside there, what the price will do is probably go close the gap. They'll probably do it via a spike or something, and that would be at the 1684 range. So Close today. Here's the parameters. Close today above 1656.99. That says that, okay, the market is now getting ready to bounce. And you'd look at the dead cat bounce, the 0.382 level, 1667. But I suspect we would see a price move a bit higher, maybe up towards the top of that downdraft candle from August 15th, right around the 1679 level. That is on the S&P 500. If we go take a look at the SPY out here, see what the SPY is doing. The SPY, it's trading out right now at 165.46 out here. Again, you see not really much in the way of carnage. I mean, it's only done that 0.382 retracement, which is 165.14. It's trading at 165.43. So it closed today inside the SPY using the same parameters. It closed above 166.03. That sets up a move. If we take a look at the move here, we'll put the Fibonacci numbers out here for you. The top of the August 15th session is 167.43, but 168.37 not out of the question. That would be your 0.618 retracement. But you need to see a good close today, something that the S&P, the SPYs, haven't seen for a good about 8, 9, 10, 12 trading sessions or so, at least after coming off of the highs out here. And today's going to be very, very important because all rallies have been sold. So it becomes relatively simple to understand whether there's any kind of change in trend that is taking place out here. And a change in trend is enough change to form a decent enough B to a C, enough of a retracement of the B to a C of an A to B equals CD down, because all rallies have been sold. Now, typically, these rallies are sold by 10:30 in the morning out here, and this one hasn't. So that is what you've done. That doesn't mean that, okay, if it doesn't sell off by 10:30, that the bulls, look, the bulls do not have control of the market, okay? They do not have control of the market out here. All that could be forming, slight change in trend here to form that B to a C of an A to B equals CD down, at least at the moment. Volume, that could tell us a little bit different story out here. So what you want to do if you're short means you want to just simply make sure that your stops are tight. That's all. Just tighten your stops. Use the average true range of the last 10 days, and either use some expansion of that, depending on how bearish you are, which would be 1.272 of the average true range. Maybe if you want to give it a longer leash, it would be the 1.618. But you want to make sure that you've got stop in place all the time that you are trading. It makes it so much easier to trade these markets. So that's in the SPY. Now, let's go see what's going on around the world out here, see if we can get any kind of signals out here as to what might take place. We'll start off by taking a look at the Nikkei. Now, the Nikkei has completed a Gartley buy pattern. This is one that we're watching carefully. We have not gotten a signal yet inside the Nikkei. And that is this blue area. So it's the smaller Gartley buy pattern that is formed. The question is it the smaller Gartley buy pattern, or is it the larger one that would form, that would give us a nice entry point into the Nikkei? The larger one sets up somewhere around the 11,660 type area. And that would be the nicer one to buy. Now, unfortunately, the relative strength indicator, that's not giving us any indication out here. At least it hasn't given us the indication that it has gotten down to an oversold level. So that means it's got more room to run to the downside. That means it's got room to run to that 11,600 area. And we have not received any kind of bullish confirmation on this shorter time frame that is out here, but we got to be paying careful attention to it. We also haven't seen a meltdown. So certainly the U.S., we didn't do a very good job handing the ball off here last night to Asia, but they just simply rebuffed it. They just said, nah, not a big deal out here. At least that was in the Nikkei. Let's go check out the other international markets. We've got the Hang Seng out here. If we take a look at the Hang Seng, that is not a bullish candle. Yes, it's green, but it's not bullish. Let me get rid of some of the things out here on the chart. So let's go see what the Nikkei has, the Hang Seng has done. If we take a look at retracements off of its low from June the 25th up to the high that was put in on August 15th, you'll see not really much damage inside here. It has not even done the 0.382 retracement, so that's not acting too shabby out here. That's on the Hang Seng, so it hasn't broken down. I don't have volume, unfortunately, to understand last night's volume as it was pushing down into this breakout area here from July 23rd. But so far, the retracement, not too bad out here. I'm just talking about this current move. Let's take a look at the Shanghai. Let's see what the Shanghai has done here. Shanghai has given some fairly significant bullish signals out here. The first was that June 25th hammer candle, the hammer of all hammer candles out here. And it's very possible that the Hang Seng If you take a look at even last night's action, just not too shabby. You've got three small-bodied candles inside this one here from August the 19th. So if we take a look at retracements coming off of the low of that hammer candle to the high that was put in out here inside the Shanghai, that was on August the 14th, what you'll see is really no retracement to speak of whatsoever. So that is not looking too shabby. Nothing to tell us whether the market's neither overbought nor oversold, so it could go either way. So that's, let's see, we've taken care of those three markets. Now let's go take a look at the FTSE. The FTSE here yesterday was signaling meltdown status. Actually, what I mean by that is we had a hammer candle that formed on August 20th. The low there was 64, 65, 73. The normal behavior, you close below a hammer. And if you're long, you are wrong out there. That meant that the FTSE wanted to go visit 6280, but something happened on the trip here this morning, and we have seen a bullish move. In fact, you've got now a bullish engulfing candle. So you've had a hammer candle as price got down to the 63.98 level. A break below that yesterday. That was not any kind of candle, and just simply a break below that. And now today what we've got is a bullish engulfing candle. That's assuming that it closes above 64.53.46. Is at 64.56 right now. But having two bullish reversal signals, the hammer and the bullish engulfing, would say, guess what? The FTSE's actually found, well, we know where the bulls are hanging out inside the FTSE, and they were just slightly below that 0.382. Maybe they're using the metric system, and that's why the 0.382 just didn't work out there. Just kidding, obviously. Let's go take a look at the DAX, see what the DAX is doing. The DAX here is now headed back towards its swing point highs. Wish I had the volume for you, but that's the August 14th level. The low is 8400.75. It's inside that right now. It's at 8411. A close inside that says it wants to go take on the top of that, which would be 8457. So it could easily do that tomorrow. So that's what's going on there. We're not seeing across the world. We're not seeing any kind of major sell-off or anything along those lines out here. So no big indications there. If we take a look at the currency market, let's go take a look at King Dollar. Let's go see what the King is doing. Had a nice move. We've seen the biggest moves here really in the currency market. That since that move up to the high of 81.95 has basically sold off a bit out here. You did get a bullish engulfing candle yesterday inside the U.S. dollar index that sets up support down at the low of August 20th, 80.77. If that low gets taken out, because there's also other bullish candles as it comes back into this June 13th level. If in fact that area gets taken out, the U.S. dollar index, let's go see what kind of retracement it has done thus far. That would head down to about $80.21 out there. Let's go take a look at the other currency pairs, see what's going on there. The euro, Japanese yen, that itself is signaling to us at this market that this is the B to a C is really going to unfold here and begin that move here today. Because what the euro Japanese yen wants to do is it wants to go visit the 132 level, which quite frankly could actually go higher. You see, the ultimate pattern of any type of Gartley buy or sell is that it forms a new C point of an A to B equals CD. The first moves are going to be a 0.382 retracement. In this case here, you can see that it made that, and it did it with a wide-ranging bar out there. Just simply traveled sideways. 3, 4, 5, 1, 2, 3, 4 small-bodied candles out there. Then you got the breakaway candle, the continuation candle on August 20th. Well, it's continued. The 0.786 level, 131.70. That's in store, but really looks to me like this thing wants to make a 100% move of a move back to the July 24th high. That will give some rocket fuel to a bounce in these markets, but we'll see if the Bears are just off at the beach here for a couple days so that the Bulls can form the B to a C of an A to B equals CD down. Be right back.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 48, S&P up 11 points right now. Russell 2000, that's on the move. That's up 10 points. We'll go take a look at that. Now, what we want to really be paying attention to today is the VIX index. One of the other things we want to look at is the VIX. We want to be paying attention. I know I can get that out. Of the 50-day exponential moving average. Right now, that's trading out at about 1418. The VIX is trading out at 1481. How about that little 81 and 18. You got to love that. Now, I don't know if there's any kind of message there. No message. Here's the message. If the VIX closes below the 50-day exponential moving average, then we got to be careful about the B to a C of an A to B equals CD down. Why do I say that? If you're watching us on Tiger TV, and I hope that you are, or if you listen on the radio or your mobile device at tfnn.mobi, remember you can always catch the archive of this show on Channel 10, and make sure that you apply this to your chart as well. Go back and just look at the data. You know, what's great about trading patterns is that you can turn out the news and you can make decisions yourself. You can look for the patterns. If you're willing to study the charts a bit, which is really all I'm asking you to do is just feed your mind. You know, we got to feed our body, so there's nothing like feeding our mind. And we give you so many clues, so much great information. At least I think it's great information that we provide you with here at TFNN, so that you can go back, you can take a look at a chart, and you can make your own trading. There's nothing is more empowering than being able to make your own trading decisions out here. and then get some feedback, from others. The real key is making sure that you surround yourself with, with a good peer group. The Tigers Den here at TFNN, that's all that you want to be able to do. That's one of the lessons that you want to make sure that you pass on to your kids. We all know that, who they hang around with will have a direct reflection on just, what kind of trouble they will or they won't get into. So at least I can tell you, I know that is the case, both for myself as well as for my kids. Now, in the case of the VIX here, hanging with the folks underneath the 50-day exponential moving average, that's when markets move up. That's when they make some significant movements up here. The last time that the VIX was above the 50-day and then got back below it was on July 5th. July 5th, we had the the S&P 500 go ahead and move quite a bit higher out here. So you want to be paying close attention. Now, if the VIX stays above the 50-day, guess what? All that's really taking place out here is just simply the B to a C of an A to B equals CD down that would be forming out here. But pay attention. 1418 is the number for us to be watching here today. Let's go to Charlie in Framingham. Charlie, Framingham, Mass. Charlie, thanks for calling. Thanks for holding. How are you today?
I'm doing well, Steve. How are you?
Excellent. Thanks so much for asking. You wanted to look at CNDO. Can you tell me what that is?
It's a biotech company, and they're popping today. And I had it I've had it about a week.
Okay, so you've had it a week here, so we're taking a look at the ticker symbol, folks, is CNDO, and this thing here had a nice sign of strength out here on August the 5th. Wide price spread, 1.7 million shares. Went from a low of 806 to 1015 and was pulling back on light volume all the way up until, I don't know what happened here on the trading session of August 13th, but big volume day, but it wasn't so much really to the downside out here. And you got, it's possible that the low of yesterday could be retested again. Now, if we just take a look at some support and support, well, first we'll take a look at support for you on this. I'm going to draw a black line across the screen here, and I'm using the June 20th low out there. Now, the reason I'm using that June 20th low, which is 732, one, because it's a swing point, but two, because we saw a bull sash candle that had formed on June 21st. So that says, okay, support should be that low of $7.32. And yesterday, this thing moved down, and that swing point also had 862,000 shares. And yesterday's move down was with 822. So it rejected that area on volume and price out there. Let's see, the close yesterday, 731. The low was low was 732. I guess it closed 1 penny, but with the $7 stock, we'll give it 1 penny for clearance. So you don't want to see it close below that, though. That's for sure. Right. Now, what this should do, and what's the term of your trade on this, Charlie? What is it that you're looking for as far as a term of the trade, time frame for your trade?
I was thinking that it probably a month at the max, but right now I'm running about a 7% profit. So depending on what you indicate, I might jump out now.
Well, I'm not saying no. Okay, you don't need to jump on now. One, I want you to have a stop. So make sure you got a stop below yesterday's low, 714, or if you get a close below that, make sure that you go ahead and take a go ahead and take a small loss or something like that. You've got, so if we take a look at some resistance that you could run into. Hey, Charlie, can you hold on through the break?
Yes, absolutely.
Great. So we're going to go back to Charlie in Framingham, Massachusetts. We're looking at ticker symbol CNDO, Coronado Biosciences, Inc. Be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's see, we got the Dow here. We need to switch charts here. Dow is up 48. The S&P is up 11. Composite up 32. Russell 2000 up 10. Needed to adjust some stops and exits on that trade on the ES Mini that I was in during the break. But let's go back out to Charlie in Framingham, Mass. We're taking a look at ticker symbol CNDO, Coronado Biosciences. So, Charlie, so there's a couple of things. So during the break, I was looking at a couple different things out here on the weekly chart. One of the things, I'll put the weekly chart up on the screen. I like this because it's got a it's got a high volume weekly bar out here that hasn't been tested from April 26th. So that's anywhere between 1082 to 1270. And there wasn't any volume or anything off of the highs out there. And then on the weekly chart, you've got this week of August 9th. Nice big move up. There, so it says at the top of that should be tested 1020. So those are good things about the equity that I like on the weekly chart. Let's go back to the daily chart and take a look at the areas that you've got to contend with here. Now, on the daily chart, we've already identified. On the weekly chart, I'm going to go back to that. I'm going to go back to that here real quickly for you, because on the weekly time frame as well, there was a bear bull sash candle that took place right here the week of July 12th. So that really sets up the importance on the weekly chart here, that low of 738 from July 5th. A close below that would say that this thing could move all the way back down to the lows here at $4 or so. So that becomes really important, that 738. So please make sure that you've got a stop in place on this. But so far, it looks okay because that area was tested yesterday with some lighter volume. Now, where you're going to run into the first area resistance, believe it or not, there's a very small little gap out here between the session of August 14th, which is $8.53, that low, and the high of the next session at $8.50. So between $8.50 and $8.53, you might get a little bit, because it's a little window out there, a little gap. What you'd like to see is you'd like to see volume coming into that area with more than, you'd love to see it come with more than 400,000 shares. Today you're already 200,000 shares with an hour in trading. So far so good coming into that area. Now, where you're going to really run into some where the pilot of the plane you're flying is going to tell you to fasten your seatbelts, it's at this bearish engulfing candle right here from August 8th. So that says that resistance, there's good resistance here up at that $10, $10.20 type range out here. What you want to be able to see is you would like to see volume accelerating as you're coming into that level out there. But that may be the extent of the move before it goes ahead and pulls back again. And that would be a nice profit for you because you're talking about, another $2. So if it can clear this little gap area here, then the next real hurdle is going to be just coming up back to those highs. But it should get up there with that nice volume thrust there on August 5th. The key is going to be closing inside 806. Because 806, the thing here with that volume bar, what you don't know is, there shouldn't have been people freaking out and trying to get their money back at 806, even if they wrote it down to yesterday's low at 714 out there. So that's my call on it. Is there something that you're seeing that you've got a question that maybe, in a quick 2-minute cursory view or so that I might have overlooked?
No, my major concern was the 714, but with the volume coming in today, it's not scaring me quite as much as it would have.
The 822. Remember, the 822 was going against 862, and you had a clear line of where the bulls were hanging out and supporting that area, and so it seems like you're clear of that area. I would just say, close below that 714. That's not a good sign.
Yeah, and I'm guessing somewhere around maybe, I don't know. I'm thinking somewhere around 950 or something like that might be my just a conservative projection for selling it. So I'm not going to.
Yeah, you said you were thinking of taking. Are you looking at this potentially for a longer term trade too, or yeah. I don't know anything about the company. Were you just trading this off of a technical, or was there a fundamental-ish type reason that you were also looking at it?
It's a local mass company, and I just, from a technical standpoint, I liked it. That's why I got into it.
Okay.
Because I saw the volume kind of drying up, and then all of a sudden it popped today, and now, you kind of get scared.
That's understandable. With that high volume out there on the weekly, up a pretty decent way out there. One of the other things you could take a look at doing maybe is just converting it to a free share trade. Yeah, let this thing get up to that 950, whatever area it is that you're comfortable with, and just simply take your principal off the table and let this thing ride with free shares.
Good point. Excellent.
Just something, and just because you it's a local company and you like it. But anyways, hey, thanks so much for calling, Charlie.
Thank you.
You bet. Have a great day. All right, now, folks, so if I go back to the ES Mini out there, earlier if you caught the Trader's Edge show, I'm inside the ES Mini chart. We identified some resistance. I had originally set my exit at 1652. I can't remember if it was because I've changed it now. I'm looking at it. So I think it was 1652. 25 or 75, I can't recall which. Now, I've gone ahead and I've adjusted it to the top of the consolidation range. So up there right now, it's my exit's at 1656. And what I've done is I've just simply brought up my sell stop on this thing to about 16.50 and a quarter. So I'm not giving it any room. Now, I'm not giving it any room for the following reasons. Number one, take a look, and we're on the 30-minute chart here. Take a look. We're coming into a normal resistance area, this consolidation box. So we know where the ES Mini has been trading. And this is going back into the time frame of August the 16th. So for several days, this thing, what is it? We're already August, the 22nd? So for, 5-6 trading sessions, it's been trading in the sideways consolidation area. Also, take a look at that upper box, both of the lower boxes on my screen here. Most importantly, the RSI Relative Strength Index, the 14 period. And you can see what it has done. It's moving up into the extreme overbought condition. Every time up here, take a look at, and we're coming into those highs by that consolidation box. The last time was back here, August 20th, between the time frame of noon and about 2:30 or so. Once it got up into that level, price began to revert. I expect we're going to see that same thing. We're not going to see a breakout, or we shouldn't see a breakout of this consolidation area at this stage, because we're coming into that level with being in an overbought condition. If I pull this thing back further, last time that price got into the overbought territory was back up here at 5 o'clock in the morning on August the 13th, and then we saw a price pull back, giving another buy option as it got down to an oversold level out here. So that is why I've gone ahead, and I'm going to let the market take me out, because it can extend itself a bit, and it certainly can go up and test the top of the range. See, I would already been out of the trade. In fact, I'm going to go ahead, I'm going to move my stop up even further while we're on here, so I can do that pretty quick. And I'll just, again, let the market go ahead and take me out if that's what it decides to do. And then I'll say, okay, I had a good morning while I was sleeping, and a good morning. Well, I always have a good morning when I'm on the air with you guys. So that's on the ES Mini trade out there, and at least you can see the set of tools that we're using. If we also take a look, just look at volume behavior on this move up here, we can see coming in between 9:30 and 10, we had nice volume. There was volume of 206,000 contracts on that next move up, only 161. Now, obviously, we are only into, what do we have? We're 12 minutes in on this session here. We are at, a total of 55,000 contracts. So I can't do the math that quickly. That's probably about, 110,000 contracts or so, 115 on a straight line math number out there. So it says we're coming in there also with lighter volume. All the reasons to be able to go ahead and tighten your stop, let the market take you out. And now the question is going to be, will I go ahead and take a short position inside the trade? And I don't know the answer to that off the top of my head out here. I know it's been a nice ride up from late last night at about 8:30 to where we're at right now. So I don't have the decision on that. But I'll wait probably for I'll wait for a little bearish reversal signal out here and watch how it trades, because there's indications that I have that this consolidation on the upside will actually get busted up. And I don't mean that right now as we're coming in, but get busted. Maybe it's later on this afternoon or so when that would take place. But that's back on the ES Mini. Now let's go take a look at some of the things that we have not looked at here during the show. We haven't looked at really the commodities. So let's go see what's going on with Goldilocks and silver out here. Let me go ahead and get rid of that A to B equals CD up. What do we have here? Another day with a small-bodied candle here inside of gold. This is, 2-4. This is 5 days after making a nice move up here. Gold is getting tired. Now, with the U.S. dollar index being up as many ticks as it was earlier in the day, and gold really not backing off much, that's pretty nice out there. I mean, that's a fairly bullish sign. So I'm still long gold. It's just my stop inside gold is really tight. So tight, I've been amazed here that we have not been taken out of that trade. Yesterday, we were taken out of a couple of our gold equity trades, just simply because we have tightened the stops. We'll let the market take us out, and they were for, somewhere around 20% returns or so out there. So we still have, let me see here, how many are we holding on to? 1, 2, 3, 4 of Goldilocks. Well, I guess one's a silver trade out there, and 3 gold trades, and then gold itself, and of course, we got that natural gas trade. Let's go check in on natural gas. The natural gas trade was one that I gave to everybody on the air during the trading session of August the 8th out there, just simply because of all the beautiful patterns that it had formed. Now what we've seen is coming off of that low. Natural gas has made the 0.618 retracement, coming in at $3.56. This is a spot here where we may start to see some kind of a pullback, but again, I just simply continue to adjust my stops inside this and really all the other trades out there. Let's go to Harry in Holliston, Massachusetts. Harry, thanks for calling. Thanks for holding. How are you today?
Good. How are you doing, Steve?
Excellent. VTR. And all these ticker symbols that I haven't seen before. VTR is that Ventus?
Ventas, yeah.
Ventas, okay.
It's a healthcare REIT.
Okay. And tell me what you're doing and how I can help.
So I have a couple of puts on the 60s on this. I had the 80 puts and I sold it at 70, and I had the 70 puts, I sold it at like 63. So now I'm at the 60 puts.
Yeah.
So I'm not. I'm trying to see where this thing can go down on the downside on this thing.
Absolutely. So let's go take a look at. Let's go hunting see where the bulls and bears are hanging out on this. Again, folks, this ticker symbol VT as in Tom R, and right now it's trading out at $61.20. So I'm going to first start off, and I want to take a look at the weekly chart out here. See if I can. Let's punch up the weekly chart. See if I can find where any of the bulls might be hanging out. So it's below the swing point. Well, it's dealing with the swing point. The most recent swing point's back here on October the 5th. And so, that low is 61.30. You're at 61.17. So you want to, so that's one spot where we're going to have to focus on. We'll take a look here. Some support right here at the high of March the 4th. It has 22 million shares, so 57.45 could be a level of support for you. I'm going to draw a line across my screen out here. And that level had acted as really a resistance zone. Are you watching this on Tiger TV by any chance?
No, I'm not. Unfortunately, I can't access it.
No problem. So when you get home and you're taking a look at your own stock chart, put it on the weekly and take a look at the week of March the 4th out there. You'll see a nice big bearish engulfing candle out there, and the top of that is 57.45, and it's got volume of 22 million shares. That area really acted as a resistance zone, and once price broke above that with conviction, which it did during about the June 15 time frame, that's when it went ahead and took off to the moon. Now, nice trade, nice pickup here. May 24th out there had a big key reversal session, big bearish engulfing candle, so that looks pretty nice out here. Your first level of support that this should come down into is about 57.45, and it's coming back to that area on light volume. So I would expect that may be an area where you're going to find some pretty decent support, and that's on the weekly chart out there.
Yeah.
All right, so that's one level. If we take a look at just A to B equals CD down patterns, what I'm going to then do is, here, I'm going to look at the June 24th level. That swing point at 2.3 million shares, and when you came through it with 1.5 million shares. That was on the trading session of August 13th. So, you're down below a B point of an A to B equals CD with lighter volume out there. I'm just trying to form this A to B equals CD. The 1-to-1 gives us a price projection of 51.82, but that's something to be paying attention to as well. What are these? The September puts that you have?
No, I have November.
November, okay. So I want to take a look here at the volume. So the volume bar here from August 16th, so as the market was creaming down, this thing lost some energy as well, took out 4.3 million shares. I think that you've got to, I think that you've got to, what you don't want to see this necessarily do here, let me take a look. What you don't want to see it do is get back inside that B point, which is June 24th's low of 63.82. You got what you have out here on the daily chart. What formed 2 days ago, which formed on August 20th, is what's called the Morningstar candle out here.
Yep.
And it says that you've got some support at 58.53. So I would say if 58.53 gets tested and holds, and it does it with less than 2.2 million shares, you may have gotten everything out of this trade for the time being, because that weekly's got some pretty decent, may have some pretty decent support for you at what was the level, about $54, 57.45. So it looks like 57.45 may be the extent of the move. I hope that helps you out.
Yeah, it does. Thank you very much. I'm pushing my luck on this thing. I mean, I've hit 2 cycles on it, so let's see where we can go. Thank you very much for your help.
Hey, you bet. Thanks so much for calling.
Take care.
That was Harry in Holliston, Mass. 877-927-6648. Be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow up 58 points right now. S&P up 12.5. Composite up 36. Russell 2000 up 11. I went ahead and, during that break, took my profits off of the table, closed out of that ES mini trade at 1652.75. A nice ride up from 1650, almost 1654. I'm sorry, 1634 late last night out there. So We'll go ahead and take the bread off of the table, getting up here to an area where we should start to see a sideways move or a reversal area here at 1654. I'll entertain coming back into the trade if it's not oversold, if it breaks out to the upside above the 1656 level, as well as I'm entertaining the short side of this trade here right now. Now, what are we paying attention to today? Number one, we're going to be paying attention to the VIX index. We're going to watch to see where that closes. If it stays above the 50-day exponential moving average, right now that's trading out at 14. That level is 1417. It's trading at 1471 right now. If it gets below that, then that would be very bullish. That'd be very positive. That combined with the Euro-Japanese yen, that would be two good indicators there that this would now make that B to a C, which could be a 0.618 retracement. And when you take a look at the S&P 500, we'll go pull that chart up on the screen. The 0.618 retracement would take you up to about 1682 or so. And again, today I say if you get a close above 1656.99, right now it's trading at 1655.41, that would be your indication at 1682, or really at least the top of August 15th, 1679.61 would be in the cards out there. So that's what we're going to be paying attention to. There's no way for the bulls to actually take control of the market today because they would need 3,768, 3,769 net advancing issues, and that is just not going to happen. Although we do have some pretty nice wide market breadth out here. There's 2,049 net advancing issues. Now, let's go take a look here at the Russell 2000. Let's go see what it is doing because that is really the leader here in the clubhouse. That's up 1 1/10%. So the Russell 2000 gave a buy signal. They gave me a buy signal here on August the 20th out there. Now, in the case of the Russell 2000, you want to see the kind of strength that's in here. If you just draw the trend line just coming off of the November 16th low, that was at 763.55. Your next touch point would be the low of April 18th out at 898.40 out there. This move back here just close to touching that trend line. Didn't even totally get down there, but close enough. So not seeing a lot of carnage inside the Russell 2000, which has been the strong index, obviously, of this move. If we go from the swing point low of June 24th out to the high that came in on August the 15th, we'll see it's only a dead cat bounce, only a 0.382 retracement thus far out here. So where is it that the Russell will bounce? Well, if we take a look at just coming off of the high from August 5th to the low back here on August the 19th, well, you can see it's already at the 0.382 level. That's 1032. The next level is 1043.99. I suspect that is where the Russell 2000 wants to head to, but more likely the Russell will go ahead and close the gap. It should. If it's the strongest out here, it'll close the gap down from August the 14th. The low of that is 1047.72. So 1047, 1044 or so, that is likely where the Russell is headed to. On the ETF structure, if we take a look at the IWM here, that would set a move up to about the range would be your 104.01 to 103.73 or so. And that is on the IWM. So and we'll take our lead also. We'll take a look at volume as the move is up there because we want to understand what's going on inside the strength of the marketplace as well as the weakness. And the weakness, well, that's nothing more than the Dow. Folks, thanks so much for staying tuned. It's Terrific Thursday. Remember this, folks. Do not be a prisoner of your past. Instead, be a pioneer of your future. Have a great Thursday, folks. I look forward to seeing you in the morning. Take care now.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.